Good morning, traders and investors. Roger Scott here, live from Puerto Rico. That's right, I'm in San Juan, Puerto Rico. I'm actually leaving today at about 5 p.m. I'm going to be doing a very important class. Now, before I get too deep into this video, please, there is a class that's happening today at 10 a.m. That's right. We're going to talk about the best stock for 2024, the best sector for 2024, how to position yourself for 2024. You don't want to miss out. Follow the link below this video, and I'm going to repeat this again before I conclude this video. And also like our YouTube channel. Now, I've been doing these videos live on YouTube with an audience, but there's a time difference here. We're 1 hour forward, so I'm up early, really early, and I usually do these live videos around 8:30. But it's really early here, and I don't want you guys to get up and get a notification that there's a live video. You're on holiday mode. I figured I'll just record this one. I'll give it to you. But please, before I conclude and even before I start, please sign up for my 10 a.m. class. It's going to be killer. You're going to love it. I do this every year, and I give you a full preview of what's on deck for the year ahead, and I'll give you a full breakdown. Now, what are we waiting for? Let's get into this video. I miss you guys. I haven't done my morning videos in a few days. So, and by the way, if I'm not as professional as I usually am, I apologize. I'm not in my studio. And again, if you're enjoying these videos, if you're liking these videos, please give me feedback. You can always email me at roger@rogerscott.com or post your comments below these videos. Now let's talk about the markets. Now, as you can see here, we're opening up really flat. I mean, there's very little trading action. Most institutional traders are done for the year. They're not interested in trading right now. And as far as I know, there are very few institutional programs other than program buying and program selling, and those have been programmed months in advance by big banks and institutions. There's not a lot of active trading involved in the market right now. That's the first thing I wanted to tell you. As far as news and data, we had the home price index. They surveyed 20 cities for to see how real estate is going. And you could see here, the number was 4.9. They were looking for a consensus of 5%. So the number came out better than expected, but not as good as expected. There's no major news today. Tomorrow, we've got international trades in goods and services. You've got jobless claims. You've got petroleum status report. And then on Friday, you've got the PMI. Now, interestingly, and I'll take a quick look at this. I just wanted to show you this. Real quick. If you look at the energy sector, and I noticed this yesterday, let me just pull it up right here. You'll notice that energies are starting to make their move. They're starting to break up a little bit above the price level that we've seen in the last several months. Matter of fact, yesterday's high took the energy sector above the previous, I would say, more than a month, about almost 2 months back, right? A month and a half or so back. So the fact that we're moving up is a good sign for the energy market, and I think this was the bottom. I think this was a big shakeout, and I think prices are actually going higher right now. I don't think inflation is falling fast enough to really offset the price of energies right now. So look for higher and stronger and firmer energy prices. Now, there's something else I wanted to talk to you about, and this is really important, and I haven't brought this up in a long time. And this is something that I'm really known for, so I'll bring it up right now. You could see right here that there's what we're looking at is the percentage of stocks in the S&P that are trading above the 50-day moving average. And as you know, there's 500 stocks. Now, what we're doing is we're looking at momentum levels. So you could see where we're at right now on an internal basis, because this takes away all market cap. This takes away the fact that Amazon has huge market cap, Apple. It makes all the stocks, it just looks at what stocks are above or below the 50-day moving average. That's it. So you could see right now, we're about 85%. About 85% of the index of the S&P 500 is trading above the 50-day moving average. And you could see the last time we were up here was, let's see here, how long ago was this? It was a while ago. I can't see the full chart because it's too, here we go. That's better. Last time we were here was beginning of 2021, then middle of 2020, and then 19. It doesn't happen very often. Matter of fact, let me make this template. Let me go ahead and make this a little smaller so you could see. I don't know why it's large, but it is. So here you could see that this doesn't happen very often. We don't go above these levels very often, quite infrequently. And if you look at it over a monthly basis, you'll see that it doesn't happen very often. Look, it happened right here in 2016 It happened in 2019. It happened in 2020. It happened in November of 2020. But what happens after we come up here? Every single time, we come down. We come down. And this is a monthly. This is a 10-year chart you're looking at. So you could see in the last 10 years, we've been here 1, 2, 3, 4, 5th, and 6th time. This is telling me the markets are grossly overbought, and we need a pullback. And yes, we're going to get a pullback, and VIX is going to get higher, but this is really important. And this is notice I haven't been showing this to you in almost a year. Why? Because I don't want to show you random action, but this is far from random. This is really, really meaningful. Now, if you look at the 200-day line, and I'll show that to you right now, it's not as puffy here. Puffy means it's not as up, but still, I want you to see perspective where we're at right now. The last time, notice we don't go above this area very often. This is a 10-year chart, 10 years. Look at where we're at right now. And the last time we were up here was December 2020. Let me show you what happened in December 2020. Just to give you some perspective. Let's see. 2020. Oops, not far enough. 2020. Let's see here when that level was right here. One second. Percentage of 200. This was in December of 2020. So let's see what happened in December of 2020. December of 2020. Let's see. December of 2020. Whoops. Right here. So again, we haven't been at this level since we were right here, which is a while back. Be cautious. Be very, very cautious, because when you see the number of stocks trading above the 50-day moving average and even above the 200-day average, we're almost at 70th percentile, we need a pullback. There's another major sign, and that's volatility. Let me show you the VIX. Oops. Again, I'm on my laptop today, so I have the fat finger error problem. But look at where volatility is. Let me just move this chart and change it to a Roger demo chart. Here we go. So you can see here we're very, very low. On a 1-year basis, look, historic lows. This is the time it happens. Let me show you one more thing. This is important. Look at the bond market. Remember, if the bond market goes higher, that means interest rates are going lower. But look how it's been topping out around here, and it hasn't really been going higher. That's danger zone. That's the bond market starting to realize that there's a good chance that stocks are not going to go higher, because the Fed is not, again, the Fed is not going to start lowering rates in March. I think the bond market is starting to get a sense of that. In terms of volatility and price movement, let me show you real quickly the levels I'm looking at on an intraday for the SPY. Right here. The level you want to pay attention to on the low end is 471.68. Excuse me, 471.61. You want to look at 468.70. And you want to look at 467.32. Let me give you those levels again. These are major breakdown levels in the short term on the SPY. 471.80-ish, 468.80-ish, and 467.37. On the upside, the level you need to pay attention to is right here. And it looks like we broke it yesterday and then came right back. So that level is still the key level we need to pay attention to. That level is 475. Let's just say 476 to be on the safe side. If we trade above 476, we may get some upside. Now, let's talk a little bit about global economy, and we'll put everything together and put it in a bow tie for you. So, real quick, regular session was optimistic as the Federal Reserve might initiate a rate cuts as early as March. That's what the market is pricing in, and you know I do not believe that. Because of that, the S&P is now at a 2-year high, and the Nasdaq is at a record high. So much for a bear market. Crash, that guy, rich dad, poor dad, we're going to have a crash, They were all wrong. 72% of a 25 basis point rate hike in March, which I think is crazy. Europe is giving us a little tailwind. Technology stocks outperformed, giving us a little bit of a tailwind. As I mentioned, China closed higher, also giving us tailwind. Semiconductors and energy stocks, same as here. Japan closed sharply higher as investors discerns no signs of a policy shift from the Bank of Japan this month's meeting. All sectors ended in the green, with energy and utility stocks experiencing the largest gains. In U.S., we had energy and semiconductor stocks. So it looks like we are getting a little bit of a tailwind. As I mentioned, the bond market's flat. The U.S. stock market's flat. Momentum levels overbought. I think we're waiting for a major catalyst right now, but we're not going to get it before the end of the year. If you are still in sectors, the sectors that were rallying 3 weeks ago, over the last 3 weeks, home builders, semiconductors, Russell, retail, QQQ, mid-caps, all interest rate sensitive. Last 5 days, Russell, retail, home builders, mid-caps, energy, communication services, material, not as interest rate sensitive, but still, look at the Russell, look at retail, look at home builders, look at mid-caps. Interest rates is what's driving the market. And in my opinion, it's not going to come out the way investors believe. Keep your eye on small caps and keep your eye on energies. Matter of fact, let's take a quick look at small caps. Let's see if they're still leading or not. Because small caps usually lead during these periods. And small caps, they're still doing good. We're still breaking higher. But if you look here, look, this is the level we have to clear. And I want to see it cleared for a few more days. We're still near that breakout level. And I'm afraid we're going to come back down because I don't think the Fed is going to be lowering anything in March. That's my personal opinion. The key right now is to be very, very cautious about this market. Don't overexpose yourself and don't get suckered into news because markets are very random. Option volatility is wide and there's a lot of stuff going on right now. If I was trading right now, as far as giving you guys a bullish and a bearish trade, there's not much to the downside right now. Hardly anything. Look at 20-week lows. There's like 3 stocks breaking down. Here, United Therapeutics. There you go. There's a short. And LKNCY, Luckin Coffee, and UTHR. Those are the only shorts that I'm having, that I'm showing right now. Now, to the upside, oh boy, 385 stocks. I don't even know where to begin. But I'll tell you what I like right now. I'll tell you where I would be right now. I would be in semiconductors. I would be in AMD, and I would be in Intel because they're running up right now, and they're running up to another level, and they're outperforming the market. So I would be in either the IWM, the Russell 2000, the QQQ, Intel, or AMD. Basically, chips or interest rate sensitive stocks right now. And honestly, be very, very, very cautious right now. Now, folks, as we bid farewell to 2023 and welcome 2024, the trading world is abiz with questions and uncertainty. Will the market gently touch down, or will rate cuts propel us to unprecedented heights? Is inflation still lurking around the corner, ready for a resurgence? Are you feeling the weight as we approach 2024? Concerned, hesitant? Here's my commitment to you. I want you to enter 2024 not just prepared, but overflowing with confidence and equipped with the finest tools and robust strategies. This is the driving force behind my exclusive event, Turning Point 2024, a unique year-end gathering. I do it every year, and we have a lot of fun. Join me at 10 a.m. today for a pivotal session. I'm going to give you a forecast, sectors to watch, ultimate revelation, my number 1 stock pick for 2024. Seize this opportunity to stay ahead of the curve. Click the link below and get geared up for a year of informed and strategic trading success in 2024. I'll see you guys at 10 a.m. Don't miss out, 10 a.m. Eastern Time. If you snooze, you lose. Click the link below, and I'll talk to you soon. Bye.